Right now, Canadians can legally bet real money on whether the Bank of Canada cuts interest rates next month. But they can't bet on who wins the next election or who wins the Stanley Cup. That's not a typo. That's literally the rulebook for Wealthsimple's brand new trading app. And buried in the fine print is one number that should make you think twice before you put a single dollar in. I'll get to it. But first, let's break down what this app actually is. I'm your crypto compass. Let's get your bearings. Wealthsimple Predict quietly launched a couple weeks ago, and it's already stirring up real controversy. CBC, Yahoo News Canada, and legal researchers are all asking the same question. Did Canada just let a betting app in through the back door? By the end of this video, you'll know exactly what you can and can't trade, why regulators drew such a strange line, and that one stat that tells you whether this is actually a smart way to put your money to work. Wealthsimple Predict is a prediction market trading app. It launched July 29th, and it's only the second product of its kind ever approved in Canada, after Interactive Brokers Canada got there first. Here's how it works. You're not betting in the legal sense. You're trading contracts on real-world outcomes. Will inflation come in above or below expectations? Will there be a heat wave in Toronto this month? Will the Bank of Canada hold rates? Around 4,000 of these contracts are live at launch, all sourced through a partnership with the US platform Kalshi. But CIRO, Canada's securities regulator, drew a hard line on what's allowed: economic, financial, and climate contracts. Fine. Sports and elections, banned outright. That might sound arbitrary, but it's actually the whole story here, because that line is exactly what's causing the controversy, and it's not staying put for long. More on that in a minute. Here's the part that's got journalists and legal researchers paying attention. Prediction markets like this one aren't legally classified as gambling in Canada. They're classified as trading. And that classification matters because gambling comes with consumer protections, spending limits, self-exclusion tools, addiction support requirements. Trading doesn't. CBC, The Conversation, and Yahoo News Canada all ran pieces this week making the same point. An app that looks and feels like sports betting. Pick a side, watch it move, cash out, or lose it all. Is operating with almost none of the safeguards a licensed casino or sportsbook would legally require. And that gap matters a lot more once you see who's actually making money on this, which is the number I promised you at the top. A cited industry study found that 70.8% of traders on platforms like this one end up losing money overall, while the top 1% of traders capture 84% of all the gains. Read that again. This isn't a coin flip where roughly half the traders come out ahead. It's a game with a small number of very sophisticated winners and a large majority of everyday traders funding those wins. That stat lands at an interesting moment. Bitcoin and Ethereum have been climbing for 6 straight trading days. ETF inflows just posted their biggest week since April, and overall market sentiment is sitting in greed territory. When the broader crypto and trading world feels this optimistic, apps like Predict tend to pull in exactly the kind of casual trader who's most likely to end up in that 70.8%. Now, remember that sports and elections are banned line from Section 1? Wealthsimple doesn't want it to stay that way. This week, the company published a white paper laying out how it thinks Canada should eventually regulate sports and political prediction contracts. The two categories CIRO currently won't allow. A company spokesperson called the current app early stages. That's not a small detail. Sports and politics made up 91% of Kalshi's trading volume globally between July 2024 and May 2026. That's the real prize Wealthsimple is angling for. And it tells you this cautious. Economic data only launch is a foot in the door, not the finished product. So, should you avoid this app entirely? Not necessarily, but you should treat it like what it actually is. Speculative trading with real financial risk, not a fun side bet. If you're going to try it, Start with a small amount you're fully prepared to lose. Avoid contracts on topics you don't genuinely follow. And remember that 70.8% number every single time you're about to place a trade. The house edge here isn't the platform. It's the other traders who know more than you do. If breakdowns like this, the fine print nobody else is reading, are useful to you, hitting subscribe means you'll catch the next one. I cover Canadian crypto and fintech every week. So here's the bottom line. Wealthsimple Predict is a real CIRO-approved product, but it's launching into a genuine regulatory gray zone. Trading rules, gambling risk, with almost none of the consumer protections that would normally come with betting your own money on an outcome. And if you do try it, that 70.8% stat isn't a scare number. It's the actual math of who this kind of app tends to work for and who it doesn't. If you found this useful, subscribe and hit the bell. I'm covering what happens if CIRO actually approves sports and election contracts, and you won't want to miss that one. What's your take? Is this trading, or is this gambling with extra steps? Drop your answer below.